Professor Sockcamp here. I want to read to you one of my favorite poems. It's called The Homework Machine. The homework machine, oh the homework machine. Professor Sockcamp here. I want to read to you one of my favorite poems. It's called The Homework Machine. The homework machine, oh the homework machine. Most perfect contraption that's ever been seen. Just put in your homework, then drop in a dime, snap on the switch, and in 10 seconds time, your homework comes out. Quick and clean as can be. Here it is. 9 plus 4? And the answer is 3. 3? Oh me. I guess it's not as perfect as I thought it would be. This is one of my favorite poems, mainly because I like the picture. Little kid putting in his homework, person hiding in there trying to do the homework, spitting it out. It's just a pretty cool picture. Now the reason I'm reading this poem and talking about the homework machine is that this video is going to cover long-term assets, like machines. Obviously, a company's not going to purchase a homework machine, but they do purchase various different kinds of machines, as well as buildings and land, and we're going to have to learn how to account for those items. So we're going to tackle this in 3 different stages. The 3 stages of a product's or a long-term asset's life cycle. The first stage is acquisition. And so we're going to look at purchasing a forklift. Now, I have made up numbers here. We're going to go with this as an example, as an illustration. So the numbers may not be exactly what a forklift would cost in reality. But for the sake of our illustration, it's going to work out okay. Now, when we talk about acquisition, we're talking about the purchase, the initial purchase of our long-term asset, our forklift. Now, when we look at this, we say, how do we account for acquisition? So when we look at spending money on a long-term asset, we have to talk about how we record this. Now, when we incur a cost, we do boop, boop, boop. When we incur a cost, it can be classified and accounted for in 2 ways. A cost can either be capitalized or it can be expensed. For example, when we buy a piece of equipment, what journal entry do we record? Well, we record a debit to equipment and a credit to cash. We record the expense or the cost as an asset, right? That is when we capitalize, when we record it as an asset. Okay? That is called capitalizing a cost. However, when we pay salaries and we record salary, expense, and cash, we have expensed it. We are recording the cost as an expense. Now, why does this matter? Well, if we record an asset and we record, if we record a cost as an asset, what isn't it going to affect? It's not going to affect profitability. Right? If we record it as an expense, it will affect profitability. Right? And so, capitalizing a cost and expensing a cost, we need to do the right thing, whatever the accounting rules say we should do. So, we are going to record our acquisition of this piece of equipment, and we need to know, what do we capitalize and what do we expense? So, I'm going to erase this now so that we can start over. Now, when we talk about long-term assets, we are going to capitalize all costs incurred to acquire and prepare it for use. Okay? We're going to capitalize all costs incurred to acquire the asset and prepare it for use. So, if we go to the list of costs we have over here, is the invoice price a cost of acquiring or preparing the asset for use? Yes. Well, maybe I should do this. So, if that's the case, then we are going to capitalize that cost. Sales tax. Is it a cost of acquiring or preparing it for use? Yes. So we're going to capitalize that. What about freight? Freight means we had to pay for the shipping of the forklift to our place of business. Is it a cost of acquiring or preparing it for use? It is. So I'm going to capitalize it. What about setup costs? To have this new electric forklift in our factory, we had to have the company who we bought it from come and install some different things to charge it or whatever. And so we have some setup costs. Well, are those a cost of acquiring or preparing it to be used? Yes. So we're going to capitalize those. And then what about repairs that have to be paid for after we have started using the forklift? Well, that is not a cost, right, of preparing it for use or for acquiring it. So we are going to expense those costs. So if I'm going to determine what to record for this asset on my books, I am going to record all of these items as my cost. So if I add all those up, I get $16,700. I'm going to expense the $450 of repairs. So let's take a minute here and we'll put together a journal so that we can record how this would work. Okay, and so we're going to purchase this January 1st of 2025. We would record a debit to equipment for $16,700. And assuming we pay cash, we're going to credit cash for $16,700. Okay? Now, what about these repairs? We've capitalized all of the costs of acquiring or preparing the asset for use. The repairs that we have to incur, or that we do incur after we start using the forklift, what do we do with those? So let's say that we paid for these repairs on July 31st of 2025. So what do we record? Well, we record repairs and maintenance expense, $450, and a credit to cash if we pay cash for it, $450. And so those are what we call ordinary repairs and maintenance. Ordinary repairs and maintenance are expensed. So they do not become a part of the asset itself. Now, this is acquisition, right? This is what we do when we purchase the asset. After we purchase the asset, then we go into the second phase of life for the asset, which is use. And use is going to be the subject of the next video.